Tax planning is a large part of what we do, often working with client solicitors and their accountants, making sure you're utilising your annual allowances or taking advantage of tax release or having benefits paid for by your company, to making sure you draw down income and capital from your savings, investments and pensions in the most tax efficient manner. By utilising your personal tax allowances, such as income and capital gains tax, whilst taking into account the value of your estate for inheritance tax planning purposes, we can help you save money and pay less tax whilst targeting your financial goals. As an individual, there are several ways in which you may have to pay tax: on your income, on the growth of certain assets or investments, on some savings interest, and on the assets you may inherit. Whether you have to pay tax and how much can depend on a number of circumstances, so it isn't always easy to work out what you owe. What is tax planning? I'm often asked. HMRC always says it wants people to pay the right amount of tax, and you should want to do this too. Many people end up paying more tax than they need to, though, because they are unaware of all of their allowances and the many legal methods available for reducing their tax bill. Tax planning lets you see exactly where you're paying tax and whether you're paying too much. You can track how much tax you've paid and whether you still own tax or have money owed to you at your personal tax account on the government's website. What's the difference between tax planning and tax avoidance? Tax planning is the process of organising your finances so that you don't pay more tax than is necessary. For example, it means keeping track of all your allowances, tax deductible expenses, charitable donations, business losses, etc., while being aware of opportunities to reduce your tax bill using things like ISAs and pensions. Tax avoidance, on the other hand, typically involves reducing your tax bill via some form of investment scheme. Many such schemes are perfectly legal and others appear to be legal from a technical point of view. However, if HMRC concludes that the sole purpose of the scheme is to avoid tax, then it may decide the scheme is not legitimate. Many investors have used tax avoidance schemes in good faith, only to find that they owe years of unpaid tax. So approach such schemes with extreme caution and seek advice. Do I need personal tax planning advice? If you run a business, do freelance or contract work, or have multiple sources of income, then you will need to complete a self-assessment tax return. Personal tax planning advice can help you ensure that you complete your self-assessment accurately, thus avoiding heavy penalties from HMRC, while ensuring you do not pay more tax than you are legally obliged to. Personal tax planning advice will alert you to all the allowances, reliefs and expenses you can claim and ensure that you don't lose money unnecessarily. It can also save you a great deal of time and effort, and this is an area we can help you with. I hope this sheds a little light on what I do and how I may be able to help you, and there is no obligation or cost for any initial discussions. So please do get in touch if I can be of help in any area of financial planning using Google Business, LinkedIn, or give me a call on my mobile 07900 927 817. Many thanks.